In Money Watch, the stock market took a big hit on Wednesday. The Dow Jones dropped more than 3%, more than 1,100 points in midday trading.
The Nasdaq and S&P 500 were also down today, both more than 4%. We're going to bring in now Robert Schein, Chief Investment Officer at Blanke Schein Wealth Management, to talk about what's happened today. Thanks so much for joining us. You know, the markets were down most of the day. What was the driving force in this?
It's the uncertainty is ruling the day. There's really a power struggle right now that we're watching play out real time, and the markets are trying to make some sense of what's truly impacting the consumer, right? We had Target today, Walmart yesterday, ultimately saying that inflation is actually knocking out the almighty consumer right now, and the consumer discretionary sector, along with all the other sectors today, were down as a result of that. And that's on the heels of what the Federal Reserve is trying to do, which is, stamp down inflation. But it looks like they are way behind the curve. So they have to start raising rates faster than where we are.
So Target and Walmart, Robert, reported lower than expected earnings yesterday. As you said, we know inflation is driving prices up. So are these disappointing reports going to make prices worse in a roundabout way?
Yeah, for the equity or the stock price right now, it's one of those things where we're seeing that play out because the uncertainty to the bottom line. The top line numbers, keep in mind, all these companies are making money. In fact, if you look at the S&P 500, the first quarter reporting, double digit in terms of over 10% growth rate year over year. But that's little too late, because it's what have you done for me lately? And going forward, that's going to impact the bottom line, whether it's supply chain or the Russia-Ukraine incident that's happening right now in terms of global geopolitical events. But if you're a corporation, like we saw, the executives are going to use anything they can, and over 75% of the companies reported S&P 500 cited inflation as their number one concern, as well as the consumer. So again, it's going to eat into the balance sheets and earnings alike right now, and that's what we're just going through, that power struggle.
And Robert, as we had mentioned, this is the biggest day of point losses for the Dow since the pandemic hit. Stocks incredibly volatile right now. So what can we expect moving forward?
Well, at the end of the day, we always want to take a long-term approach. For our clients, we have a balance. We look for quality. It's a great opportunity to upgrade your portfolio for higher quality names. And let's be honest, right now, you always want to go shopping when things are on sale. And we're seeing quite a bit of opportunity across the board if you have a longer-term approach. Stocks won't continue to go down forever. And at the end of the day, there's going to be some disconnect between earnings and valuation. And when earnings really trump valuation, then we're going to see markets turn around. We can't tell you when the market is actually going to bottom, but we're getting closer to what could be, we're in the bear market, so we get some bear market rallies, but we could see some opportunities right now for a longer term perspective.
Well, you bring up a good point, because a lot of people said there were areas of the market that were just so overvalued. Do you think that there's just a correction going on in some of these areas?
Yeah, you're seeing a large cap growth, the top names, those are longer dated asset classes. That's how Wall Street views them in terms of their balance sheet and cash flows. So as interest rates rise, you get the earnings impact negatively. So that's why we're seeing large cap growth being mostly impacted the worst year to date, down 30+% in some of those big tech names.
Right. All right. Well, Robert Schein, thank you so much. We appreciate your insight.
Pleasure to be with you.